Are we live? Yes, we are live. How you guys doing? Today, I am JD Smith, and I am streaming live through my Facebook page and through my Hipterus YouTube channel. That's HIPTURIST, Hipterus. And this episode, the audio for this live stream is going to be on Spotify podcast, Apple Podcasts, and everywhere big. Anchor also. Just give me 1 second. Let me make sure the stream is going. Let's see. Make sure everything is good. Make sure everything's good. All right. Yes. Make sure. Okay. Stream is going. Okay. I am going to wait a few more minutes to allow everyone time to come on in and hang out with me again for like the second day in a row. You know, I am new to live streaming, so I'm just testing it out, and hope to do it more every week to give key updates on all things money, business, finance, and like things of that nature too as well. And this particular stream is it's about a question that I received yesterday during yesterday's stream that I didn't catch yet, but now I understand how to use this a little bit more. So, okay, let's wait a few more minutes. Oh, I want to give a shout out to Marijuana Hall of Fame. If anyone is interested, Google Marijuana Hall of Fame. Check them out. They are strong advocates for the legal cannabis industry, and they are thought leaders in the space. And I have like a few projects that is coming up with them sometime soon. So check that out. Marijuana Hall of Fame. All right. So, okay. Some people in here. Now, today's topic is negative interest rates. All right. So first, let's start with the definition of it, right? So in the news media and like the mainstream space, you have heard this term from the president, Congress, the banking sector. Rates are going negative, right? So what does that exactly mean? Well, negative interest rates is speaking in terms to the federal funds rate. The federal funds rate is the interest rate that the Federal Reserve Bank sets for banks to lend each other overnight. So most people don't know that banks lend to other banks 24 hours a day, especially overnight, because banks don't hold a lot of cash in the bank or reserves, right? They don't have to because the system is called fractional reserve banking. So for every $100 the bank lends out, they have to hold like say like $10. Now the reserve requirements is 0, but that's a whole different topic itself that I will speak about another day, because in my own opinion, that's pretty bad that banks don't need to hold any cash inside the bank. I think that's catastrophic. Sorry, what's this? Okay, yeah. So the negative interest rates they are speaking about is the federal funds rate. All right. So the central bank sets a lending rate to which banks use that rate as a benchmark on setting rates for other types of loans, like auto loans, student loans, corporate debt loans, housing loans, mortgages, all that stuff. Sorry, excuse me. So pretty much all rates are set by the federal funds rate. Sometime in early March, the central bank slashed the rate to near zero. I think it's around 0.26 now, right? And so that basically states that banks can lend at a lower rate. So that sounds good, but at a certain level, banks make a huge amount of their profits from higher interest rates, right? So if I was a bank and the Federal Reserve said, hey, slash your rate to near zero or one of this kind of stuff, whatever, that means I make less cash on loans. So as a bank, what am I going to do? I'm going to make it harder for the average individual to borrow money from me, right? So that's why now you kind of see like Chase's credit score requirements is now at around a 700 credit score. There's a large portion of like home buyers who credit score is between, say, 620 and 680, right? And so if banks increase the credit score requirement to 700, then a lot of y'all can't get new mortgages to get new homes or that commercial property that you are trying to get to start a store or a strip mall. So it just makes it harder. So and that's only at close to zero rates. So if interest rates fall negative, that is going to have a strong pull on the financial markets. So what are financial markets? The stock market is a financial market. The bond market or debt or government or corporate debt is a financial market. The Forex, which stands for foreign exchange or just trading and swapping currencies, is a financial market. And then there's private ones and different stuff, right? So sorry, I just received a question. Will negative interest rates affect student loans? Yes, they will. So I believe that if rates go negative, banks are going to resist dropping the student loan rate extremely low, or whoever lends you this stuff, right? So banks have to make money off of loans. If they slash your rates low, they don't turn a profit. So they are going to make it a little more challenging for you to pay that money back. Now, the second problem is because of this whole depressionary state, nobody has money anyway because there is no income coming in. So if you have no income coming in, then how can you service your actual student loan debt or your mortgage or your auto loan debt, right? Like you can't service that. So at that point, a lower interest rate on student loans or mortgages or auto loans won't serve you any purpose because you don't have income coming in. Now, for individuals who, got a little change in their pocket, what I'm saying, doing this whole situation, then you might turn out well, unless you have other obligations out there. But right now, household debt is actually skyrocketing. Corporate private debt is actually skyrocketing, and they can't service it. So that's a problem that I'm pretty sure that Congress is going to be addressing between now and next year, because you have a lot of people who graduated from school who can't service debt. So that's a problem, right? So what will happen when interest rates go negative? The number one thing that could happen, that's more likely to happen, in my own humble view, my own opinion, the Federal Reserve will cut rates to negative in 2021, probably by the second quarter. What that is going to probably do is that is going to make treasury bonds or debt issued by the federal government drop. So a lot of investors who invest in our government debt is going to sell their bonds. That's going to be like a massive sell-off. And so if you have all these investors like foreign governments, foreign banks, pension plans, 401ks, and just institutions that have like a huge volume of cash to invest, is going to sell bonds, and it's going to push them into more riskier assets like corporate debt and the stock market. So more than likely, you will see the stock market skyrocket, right? So a skyrocket in the stock market sounds good, but the problem is it's not really going to benefit the average individual because economically we have a massive slowdown, and as soon as they open up the whole economy, it's still not going to be the same, mainly because of like social distancing rules and standards and that kind of stuff, right? So a rising stock market is not going to help you. It might help people who is trying to retire now and that kind of stuff, whatever. If they have a lot of equities in their portfolio. If they have bonds, they're going to be in trouble because bonds is yielding them income, so they can live comfortably during retirement, right? But if everyone sells off bonds, then that's going to be a problem. On a grander scale, a massive bond sell-off is going to hurt other countries. economically and financially, right? Because you have tons of other countries out there now who invest a lot of their tax money in U.S. government bonds. And if those bonds drop in value, then they're not making like a lot of money. And the stock market is going to be swinging crazy, you know what I'm saying? And it's kind of stuff, right? Second, negative interest rates can really cause damage to the value of our currency, the US dollar, right? So negative interest rates could help cause hyperinflation. Inflation is pretty much the price of goods out there skyrockets, right? Hyperinflation is the extreme rising of prices of goods and services, right? That's all it means. And so if inflation skyrockets, just imagine a gallon of milk for like $15, right? When hyperinflation comes from negative interest rates, you know, a lot of money just kind of sort of moving around from bonds and into the stock market, and just pretty much just throughout the whole economy, because money needs somewhere to park itself. You are going to see our dollar drop and devalue. If the dollar drops, then the money you have inside your pocket is going to be worth zero, you know, nothing. And to be honest, currently, most people don't know that our dollar only buys the equivalent of between 3 and 4 cents, right? So the $1 that you have, it's only buying the equivalent of 3 to 4 cents. You're not truly getting a dollar's worth. And let me show you the evidence of that now. 1 second. So 1 second. My keyboard is acting up currently. Hold on a minute. Sorry, I'm having some technical difficulties at the present moment. Technology acts funny at times. Let's see. Okay. This dollar purchasing power. Okay, let's see. Okay, here we go. It's the chart here. Okay, so show you guys this screen share. Okay. Now, this right here is all. Quick note. So if I believe that learning economics is very, very important, and it can change your life. If you don't know economics, I promise you, you will never in your life understand money. I don't care how smart you are. I don't care if a person's reads books on financial literacy. It doesn't matter. You have to understand economics. If you do not understand it, you will not understand money. You will not truly understand wealth. You will always miss something. So this chart here is from the central bank, the Federal Reserve Bank of St. Louis. We have about 12 central banks, and every week they put out tons of great information about economics and the state of finances and the economy, right? So this chart here, let me blow it up. So this chart here is the consumer price index chart, and it shows the purchasing power of the US dollar. So as you can see here, in 1920, oh, let me see here. The purchasing power was around in the dollar was around about the equivalent of $5. And you can see all the way over here in 2020, it says of April, it says 39.0, right? That stands for 3 cents. If you move over the decimal place, it stands for 3 cents. So your dollar is only buying the equivalent of 3 cents. Okay, it is not buying the equivalent of products that equals out to $1 or 100 cents. It's literally purchasing 3 cents. All right, that's called evidence. And I will leave that link inside the description. Let me see. We have a comment. Yes, Rocco says economics equals a language of money. Yes, it does. It's very true. All right. So that's pretty much all I wanted to speak about negative interest rates. If you have further questions, please DM me or leave a comment underneath this video. Hopefully this stream was helpful. If not, you know, comment down below so I can, you know, do a little better and answer a lot more questions fluently and that type of stuff. And I just received breaking news that JCPenney filed for bankruptcy. That's a very horrible thing because what most people don't understand is retail and travel is major employers in the global economy, right? So more individuals work inside a retail type store and travel than say corporate America, service industry, and that kind of stuff, right? So what JCPenney did, they're not gonna be the only one. Trust me, it's gonna be a lot more bankruptcies. Banks are gonna fail. Banks are broke. That's just my personal opinion. That the evidence is gonna come out. Trust me on that one. And just we're in that type of state where all the problems that we have kicked down the road, especially since 2008 crisis, is now coming home to roost. Nobody can stop it, but it doesn't matter. You have to prep yourself accordingly, right? Number one, you spend as much time as possible increasing your knowledge of economics. That is very, very important, because you won't understand the actual language that people are trying to tell you things, right? Number two, it is very important that you save money. You gotta save money. You have to cut your expenses, focus on your bills, and save money. Number three, this is a perfect time to develop profitable skills. I'm not talking about school. Okay. I got views about college and all that kind of stuff. I probably will do another video all about that. Let's see what's going on here. Sorry. And yes, so develop profitable skills. Like let's talk about it. Like, what are profitable skills? Like, what are things that you do well that everyone comes to you for, right? What can you do well that everyone asks you about or comes to you for? Those are profitable skills. If you can take those skills and turn them into a business, or right, and derive like a stream of income, that is very smart. Like a prime example, I'm seeing a lot of people make masks. That's a smart idea. People purchasing masks and needing masks is going to stick around for quite some time. So that's a good side hustle that you can probably expand in that type of stuff. Designing shirts. It's kind of like this one, the Marijuana Hall of Fame shirt. That's a skill. Believe it or not, cleaning houses, right? Not everyone is going to clean their house, office, and that kind of stuff. So if you want to do it. Hell, cutting grass. Not everyone is going to cut the grass, and you can make tons of money. Building websites, coaching, giving advice. This type of stuff is what people will always need. And kind of like me, giving out information. I take very high level, complex financial and economic information and break it down simple, so everyone can understand it, right? So yeah, develop those profitable skills, save some money, and cut your expenses, focus on bills, and keep it going. I have another question. How do we determine profitability of the skills we have in our toolbox versus endeavors that are expensive hobbies? Good question, Shar. I would say on the later part of the question, endeavors that are expensive hobbies. How can you tell something is a hobby? I would say, can you turn that into a business? Meaning, will people pay you for it? If people is not going to pay you for it or show some type of interest in coming to you for that, then maybe that is a hobby. Like it's all about what can you turn into income, right? That's the thing about, like, what can you do that you can turn into income? So that's my answer. Any more questions, anybody? ask away, you know, at anything entrepreneurship, business, economics, and you know that type of stuff. So let me see if there's any more questions here. Okay. I guess that's it for now. I'm gonna try to do another live stream tomorrow or Sunday. You can tune in here on my Facebook page or on the Hipterist YouTube channel. That's HIPTURIST. Oh, also, I'm going to start having a live guest on the show. Definitely, I got to get Shar Reinhardt on here, Maria, the super agent, to talk about real estate and properties, and definitely one of the smartest individuals in personal finance and stock investing, John Hall. Very brilliant guy. And did I say Shar? Shar as well. She is the foremost expert on all things dividend investing, taxes. She's a very smart CPA and just a all around motivational speaker. So you have to check it out, you know. So I guess that's it for now, and see you guys soon.